Hey guys, Optimus Futures here. Today we're going to be discussing TPO charts, what their purpose is, their basic components, and how traders can use this tool to their advantage. We're also going to dive into a little bit of the theory around TPO charts and some of the more advanced settings that can be found on the Optimus Flow platform. So here in front of me is just a bare bones TPO chart with its most basic components. You can get a little bit more complicated than this, but for now we'll focus on the basics and I'll go over some of the key areas to watch out for. So the first thing you need to understand about the profile is that it's different than candlesticks or monkey bars or a line graph. All the information is collapsed onto itself from right to left, so moving this way. As you can see, this is that same day in candlestick form. I'll make this a little easier for you to see. This is a 30-minute time frame, 30-minute candlesticks, and this is that same day. All right. So both have 30-minute time periods. Both encapsulate one full day of trading. But the benefit of the TPO chart is being able to see the data collapsed into a statistical distribution. So if you split the profile up like this, you can really see the similarities between the candlestick charts, but we're just missing the bodies and the wicks of those candles. You may also be wondering what each of these letters stand for, and it's pretty simple. Each 30-minute period, instead of being a red or green candle, like in the candlestick charts, are given a letter to represent a chunk of time. So the first 30-minute period is A, the second 30-minute period is B, and so on. So that's pretty simple. The next thing I'll point out is this small triangle in the A period. This is market open. And this triangle in the M period is market close. Pretty simple, pretty straightforward for now. Okay, so I've been focusing on this day here, and this is a standard balanced day where on both price extremes, buyers and sellers stepped in and shoved price back into the middle here. That brings us to our next concept of fair value. I'd like to draw your attention to the highlighted area. This is what's considered fair value. It's calculated by using the most active 70% of the profile. So the remaining 30% are the shaded areas down here and up here. And that's where price was not considered fair by market participants. So when price discovered lower, market participants responded by buying because they believed this was a good deal. And when price drifted above value, market participants responded by selling. They thought this was overpriced. And so price did not spend a lot of time in these areas, and the majority of the day was here. And that's why it's considered fair value, just for this specific day, not in the grand scheme of things, but just for that day. Excuse me. You might also be wondering what this white line is here, right here, and this is the point of control. Every profile will have one. There's one here, as you can see. Every profile will have one, and it's the point where price spent the longest period of time transacting around. So for many traders, this becomes a really important reference point into the future, and can sometimes be used as support and resistance. The longer and the thicker and the more stacked TPOs within the point of control becomes more important. It becomes a stronger reference point in the future. The thinner and the smaller, the less significant it is for traders. This really brings us into the next part of the video, where I'll show you how you can really critically analyze TPO charts and use that analysis on a daily basis. I'll walk you through some of the most common day type distributions and profiles that tend to develop in the marketplace. So before we get into the day types, I'll talk about two important concepts here. The first is excess and the second is something called a poor low. These concepts are complete opposites of each other, and I'll explain why. So excess is formed on a profile when there are at least two TPO prints at the bottom or the top of the profile, as you can see here, 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 and here. This shows a market rejecting those prices temporarily, and they believe that its price has gone too far from value during that daytime period. So for traders that use candlesticks, this is similar to a wick, a bottoming wick, or a topping tail. So understanding why excess forms in the marketplace is an integral part of auction theory, which I will not get into today. However, the TPO chart is the main instrument used by traders to read the auctioning process as it plays out in the market. And excess is considered, at least temporarily, as a strong low or high. And the opposite is true for a poor low or a poor high. And I'll find one for you now here. Right over here, this would be considered a poor low. There's two horizontally stacked TPOs. So this means price spent a significant amount of time without what is considered a finished auctioning process. Auctions should end in a capitulatory manner. So when a profile becomes truncated and transacts without meaningful excess at the top or the bottom of the profile, it is considered poor structure. So let's get into some of the more typical textbook day type structures that often form in the market. We're looking at micro E-mini futures here, and this profile here is called a P-shape. A P-shaped day. The name is self-evident. It's characterized by a long single print buying tail and a fatter D-shaped distribution at the top of the profile. P-shaped days typically have an opening drive that never revisit prices lower. So as you can see, this was the open. And traders view the P-shape typically as days of rapid short covering and emotional buying off the open. So these types of days can be found after considerable and sustained pushes to the downside, whereby short-term swing traders are typically buying to close their short positions. Understanding and being able to identify early in the day the potential for a typical day type pattern to form can definitely better position a trader and provide useful context for their intraday trades. The trick is being able to identify it early enough in the day to know what's about to happen. So the next pattern that we'll discuss is the exact opposite of a P-shape, and it is a lowercase b-shaped day. I'll find one here for you now. We'll go back to August 30th here as a typical B-shaped day. It's characterized by a long single printed selling tail and a D-shaped distribution at the bottom. So traders they consider the B-shape to be the opposite of the P-shape, and this is a liquidation break. So meaning where traders are aggressively liquidating their long positions. They're panicking, they're getting out. This often occurs after price is consolidated for a number of days at a key support area, or after large trend days that seem to continue and never bounce. People get very nervous, and this is quite an emotional reaction to such movements. So the next day type we'll have a look at is the uppercase B-shaped day, also known as a double distribution. So there's one over here, and there's one back here on October 7th. So as you can see here, is characterized by two balanced distributions divided by single prints in the middle. You can see that here, the single prints. So these types of days can be considered bearish or bullish depending on the opening. So for instance, if the first balanced distribution was broken to the upside, then it would be considered bullish. If it was broken to the downside, it would be considered bearish. As you can see on this day, we opened up here and we finished down here. This is quite bearish in the short term. We rejected off the open, balanced, and continued down, and formed another balance. So the next day type that I'll talk about is a trend day. Now, there's a trend day here. This is to the upside. There's a trend day here to the downside. As you can see, they're characterized by their length and their narrowness, and no considerable balance distributions involved. So this day type forms when price either pushes higher or lower all day without much time spent in any one price zone. So this was all down on this day here on the August 26th. So as you can see, we can split it up. It just bled all day. Price opened up here and it ended on the lows. So traders consider this as a market searching for balance. In other words, the market was out of balance all day because buyers and sellers could never agree and facilitate trade long enough in any one price range for TPOs to stack horizontally and form a distribution. There's a slight distribution right over here, but it's so weak. It's not thick like over here or over here. Traders just couldn't, the market participants rather, could not agree on price all day. So as you can tell, looking at all these days here, not everything's going to be a textbook day. There's lots of awkward days that somewhat form a double distribution or somewhat form balance. But the key is learning to be able to recognize when these days are forming, and that's really where the edge comes from for traders, and it's a powerful tool to use when used correctly. So I'll now show you some cool, some more advanced features that Optimus Flow offers its customers. Remember that Optimus Flow, along with these TPO charts, are all free when you sign up through Optimus Futures, so be sure to take advantage of that. So this feature that I really like is where you collapse individual days onto each other. So we can merge all these to the left, and this is really useful for when you want to see what's going on in the bigger picture. So remember, it's never advisable to trade within a vacuum, and understanding what's happening in the previous weeks is very important. So as you can see, I just collapsed from August 23rd to October 3rd. And as you can see, this is a D-shaped balance profile. Now, looking at it split up, I'll reset all, you might not be able to see that considering there was a lot of oscillation in this price zone. But, when you combine all these together, you can really see the balance form. And that's useful, I find, mostly for when price is oscillating within a zone. So the next feature on Optimus Flow that some of the other platforms out there, they don't have, it can be found under chart settings. So we'll go there now, and it is TPO statistics. I'll draw your attention to RF, also known as rotation factor. Rotation factor is calculated based on 30-minute periods. I'll take this profile as a rotation factor of -7, okay? So I'll explain how it does this. So every 30-minute period, this is A period, B period, since it has a lower high and a lower low from period A, this would give it a -2 rating, okay? And period C actually has a higher high and a higher high and a higher low. So this would give it a +2 rating. So it'll add up all of these periods and give you a number. It does the arithmetic automatically for you. And so what that can tell you is that on this day, if we're confused about the structure of the market and we want to know what was the auction doing at that time, we can look to the rotation factor and say -7. Okay, so price was drifting down throughout this day. So a negative rotation factor, price drifting down. A positive rotation factor typically means that price was drifting upwards. So the next feature I'll show you now is TPO up and TPO down. This is another nuanced way to read market profile. And basically what it is it will take this day, it'll find the point of control, it will add up all the TPOs that are above that point of control, and it'll add up all the TPOs that are below that point of control. And so on this day, we have 85 TPOs above the point of control. So 85 above and 67 below. So when we're trying to understand who's in control of this market, are the buyers in control or are the sellers in control? We can read this down here and say, okay, 85 TPOs above, meaning there were more traders and more market participants willing to stay short above the point of control than there were traders willing to stay long below the point of control. So that's a nuanced way to understand what's happening within the profile. And as you can see, the next day we really dropped off. So that's all for now. Thanks for sticking around. Please check out Optimus Flow platform. All these tools are absolutely free if you are an Optimus Futures customer, so be sure to take advantage of that. If you're interested in more market profile videos or have any questions, please let us know. There's tons of features here that I didn't go over, so just come and check it out. Thanks.